Welcome to Charts This Week. My name's David Linton. I run Updata, and this week we've got a lot to cover. In fact, this week I'm going to go through all the charts really from the new Updata data feed. So very much focused towards energy and commodities trading. The take-up's been really good in Europe and in the US as well. More and more energy traders are demanding higher levels of data, and we're really happy to service that. So today's charts I'm going to predominantly look at the energy, but we will go through from the feed. And the feed covers Forex, commodities, the power markets, pretty well everything you'd need to trade energy, certainly in Europe and the US exchanges. Also, the Dow Jones energy feed is really powerful. Good few updates a minute here coming through for energy markets. I know a lot of people watching this news wire, so quite a big addition to the Updata system. And there's a lot we're doing with this data to help you analyze it. So looking at charts, I'm going to start with the S&P. This is an Updata S&P chart. And here we see that we've got really the monthly picture here where we're coming in, and we've really got the situation where we're stuck in the cloud on the monthly chart. It's really quite key, this. We've hit this 1300 level. We had a very big fall on Friday on the S&P 500, and really we've hit this sort of top of the cloud. And it's quite interesting how these bigger term, longer term levels can actually come and impact us short term. So we are sort of nudging the top of the cloud. Throw on the price, which is promising, but this cloud is going to create some resistance on the lagging line. So that's quite key. And if we look at the weekly chart, here we see that we had the sell signal back in 2007. That's the time that we should have been bearish on the market, and it transpired that the market was, of course, very bearish. It took time to cross back through on the weekly. Here we see the 61.8 level, which was at this magic 1225 mark, or 1228. We see that this was a really key level for the market to break through. We did break through. So we've retraced quite a lot of this big move down. Now about 70% has been retraced. So quite key that we did break through that in the longer term. But of course, the interesting thing is this big move down on Friday. This is the daily candle for it. And we see we are a long way above the cloud. We've got quite a lot of scope to come back to 1200 to touch the cloud on the lagging line, or 1175. So there is really a potential of about 100 points downside on the S&P. That's not to say that we will fall 100 points, but that's how much we could fall and stay within trend on the daily. So quite significant, that. And if we look at the 60-minute chart, we see last Friday's price action has in effect given us a cross. So it's really quite key that we've been above the cloud for a good couple of months, really, December, January, just coming to the end of January now. We're through just at the end, and these 2-month runs are about what we see. We don't normally on the 60-minute chart see runs of 3 and 4 months. We do get a setback every couple of months. So the trend looks to be over. We had resistance at 1300. We failed to stay above that. We did have an intraday move above it, but quite a lot of 60-minute candles touching that level, just struggling to get through the 1300 mark, and then we're back now through the cloud. So it really does suggest that the US market is due a setback now. And here we see the daily point and figure chart, really quite key. The downside targets that were given at the height of the crisis were met. Then these upside targets, 1270 and 1300, all roads were pointing to this 1300. So we've met the target now, which is significant. And if we look at even the 5x3, we see we had a target 1270 again, so that's a cluster, 2 targets off different charts pointing to the same level, very significant. 1320 it was the level on this chart. We haven't quite made it there, and we're starting to see again this sort of setback. And if we look at the 1-minute chart, quite significant this. We see here that we had this big target with Friday's move, big move down. We closed lower, activating the target. So we've got a thrust projection now down to 1230 on the S&P. So it really does suggest that we've fallen about 25 points. We've got at least another 50 points downside probably from here. So quite significant, that really quite good. And then if we see the daily chart, again, just coming back to this, what do we need to get a new upside target? And I put this chart here deliberately. We see that we actually need to get a setback, we need to pull down lower, and then we need a thrust off that low, an uninterrupted buying thrust projecting a new upside target. So really there's not much clear upside to the US market at the moment until we get this setback where we pull lower, off the low we get a thrust and we'll get a new target hopefully. So that's what we should be looking out for the market to go higher. So there's a much higher probability right now that the market will go lower. And so that's the short-term picture, of course. The very long-term picture is still pretty bullish. Then if we look at the US dollar, the euro-US dollar, we see that it's really quite interesting. You know, the Forex feed on Updata is amazing. This, super fast feed. A lot of our clients who've been trialing the feed have been saying that Forex is absolutely fast as they could wish for. And we see here that the euro has really gone through on the dollar. We've come back, we've through the cloud, we've had a big recovery in the euro. We're through on the price but not on the lagging line. So we still remain bearish on the euro versus the dollar, but this level is really now starting to be tested. And we get into the next 2 or 3 weeks, if we're still at these levels, we start to feel a bit more bullish on the euro. But at the moment, we have to take it that the cloud is key. Here we see the US dollar euro 60-minute chart, and again we see how we had the cross early in January. It was about the 10th. This was the buying signal that the euro would strengthen against the dollar. We've stayed above the cloud, and a bit like the US stock market, we're now on the 60-minute chart, we're sort of through. Today we're poking back up above this cloud, but after such a run, it does suggest that there's probably now a tailing off and a bit of a downside. So we expect the euro to come back a bit this week, probably. And we look at the daily point and figure targets. We see that we've got downside targets, 102, 97, 106. These downside targets are really quite key. There's 3 of them. It does suggest more downside pressure. The downtrend also tells us that, but we do have this upside target that says we're going back to the top of the range as well. So resolving these targets that conflict with one another is quite key, but I would favour the downside on this chart because there's more downside targets and we're in the downtrend. So the euro long, medium term doesn't look so good. We go to the 1-minute chart. Here we do see the big sort of thrust target, which was that sell. We've had a bit of a recovery. If we fall through this 135.80 level, this is a 1-minute chart. These charts are updating lightning fast on your screen and you're getting all the targets coming in. If you trade Forex, these charts are amazing. And so here we see what we need to happen to activate this downside target of 132.60. So the target is there, but we need to have a new low to activate it. Quite critical, that. And then if we look at sterling against the dollar, here we see the cloud has been quite interesting. We've rolled over a bit. We did have this recovery in sterling, but we're back below the cloud. So at the moment, there's that pressure hanging over sterling on the cloud. And if we go to the daily point and figure chart, we see these downside targets as well kicking in. In fact, this is Euro GBP. So this is Euro sterling, and we do see that sterling will potentially strengthen against the euro. It's the stronger of the two. So we see 73, 73.50, suggesting that that sterling will improve against the euro. So quite key on the daily chart. And again, the 1-minute chart will take you to the much shorter term picture. Euro GBP 84.85, 84.35. These are the intermediate downside targets to those targets back in the 70s. So this is quite key. Again, we've got a conflicting upside, but with a trend and these 2 targets, you probably favour the downside. If we look at Aussie, here we see on Aussie dollar this amazing little move here that actually tells us that what we need to do to get a new high, you should be on the lookout for this in your charts. You see that's an uninterrupted thrust. That's probably given us a target. And if we go to the point and figure chart, lo and behold, that's that thrust there. That's the uninterrupted target thrust, giving us a target of 114. Now 114 on the Aussie needs to be activated with a new high. So that we've been set up with the target. This is what we're talking about when if we see the US market pull back and then thrust up. We've pulled back, we thrusted up. It's given us a new target. Notice how the other ones were all met all the way up here. That 114 target, if we get a close above 102.50, then that's telling us 114. So it's quite hard to imagine that on the Aussie, but that's what needs to happen. It's got to get through that 102.50. Then we look at the short-term picture. Quite interesting. We've had a lot of sideways movement, and this is a 1 minute chart, remember, so there's a lot of data in this. 97.60, 98.20, 98.30, quite a few downside moves in this sideways range, and then a new kick-up target of 101.50, but again, we'd have to break above this 99.65 level for that to be activated. So you really do need to understand how these charts work. There's over 1,000 cross rates in the Updata Forex feed, and I've been having a look at lots of the Forex charts. Have been really exciting. Again, if you're trading European power, for example, Hungary, here we see the Hungarian currency against the euro, and again, if we then look at Polish zloty, where the power is priced in zlotys, then we do see this quite key chart again, where we're below on the 60-minute cloud. Nice long histories here, so we see that actually there's pressure on the zloty to the downside, and that might help you in terms of pricing your European power. If we look at oil, again, the oil feed on Updata is blisteringly fast. A lot of people in the US starting to rely on these charts for their trading, and really quite key how we see here the weekly chart. This big fall through has created this big cloud that we've actually come through. Very bullish now long term as the oil. We see we're through the 50% mark, which is also by coincidence the construction of the clouds. That 50% mark is also quite key. And now the 61.8 retracement from this big move down is at 103.39. So that's where we would expect the next level of resistance on WTI. And in fact, if we look at the WTI daily chart, we see here how we we've broken out above the cloud. We had congestion for a good year or two, and now we're kicking higher. This is like a continuation pattern where we're now going out of the range and moving higher again. Seasonality tells us this is a 5-year weighted seasonality, which takes each year into account. In calculating the coming year, 2011, we see that the seasonality tells us that oil goes up in the first half of the year, summer driving season. We all know this, but the seasonality does demonstrate that oil has a very strong likelihood to rise at this time of year and a good few months ahead of it. So the fact that oil is making new highs does suggest this is going to happen. And here we see the correlation between oil and the US stock market. I know a lot of you look at this. The correlation has been very strong in the last few months, but now is kicking down. This was quite a long period of, this is a 65-day correlation, so like a quarterly measure, quite a strong period of consolidation. So it suggests the US stock market is going to fall, but oil is not going to fall. It's going the other way. The correlation is changing and reducing. So quite significant. We see new highs in oil, but a setback in the stock market. If we look at the 60-minute chart, was the downside pressure on oil last week. You know, in the shorter term, it was bearish. Crossed through on Thursday, Friday. We see the move through the cloud, and so that tells us now that we're in bullish mode in short term as well. So we're really going to hopefully go back and nudge those new highs. We're going to test those highs. And here we see the daily chart, the daily chart with point and figure, a 1x3 chart. Upside targets of $111, $96. Is really the next target that we'd look to, and here are all the risk-reward ratios. We've got a little mini target of 76, but we need to close below 85 to activate that. So at the moment, you'd favour the upside. It's quite key. And then if we look at the 1 minute chart, again, the oil feed on Updata is super fast. These charts are building all the time, so you've got the picture building of the 1 minute chart, and that's really quite key here. We see that we've got this these downside targets, 87, 50, 80, 88, 70. So whilst we've had a jump up, very short term, by the time you're seeing this, these targets may have changed. We've got new ones coming in. But you can see the very short term, we may see a little bit of a setback. But the picture for oil over the week or two on that 60-minute chart is looking pretty bullish. And we look at Brent, it's really quite fascinating the way that the spread between Brent and WTI has really opened out. And here we see that this is really has opened out. It's, you know, it's $10 or so, having been, you know, only a few dollars. You know, there's been lots of debate about the delivery point in the last few weeks, and now we're seeing this spread really open out. And here we see the trend on Brent. This contract is really just has been almost crystal clear for a good few months now. And what's interesting is we are nudging this $100. In fact, today's high so far has been 99.70. So we're 99.97. So we've been 3 cents off hitting that $100 mark. So any day now, you are going to see headlines in the newspaper saying oil at $100 a barrel. You know, they're going to say that probably even tomorrow, saying nearly $100. But this $100 now looks inevitable that we're going to break it. May not happen immediately soon, but it is on the cards. And here we see the 1 minute targets. We had a target of 100 given last week when we were back in the mid-90s. 102 was another target given. We've had a little bit of a setback. The trend has changed. This is a very short-term picture, 96.60. So it does suggest we might pull back a few dollars before we rise again. But the overall picture for oil is pretty bullish long-term. And if we look at nat gas, this nat gas chart is really quite fascinating. The big fall-off in nat gas, and again, you know, with the NYMEX feed, you get all the WTI, nat gas, you get gas oils, you know, a whole mix of oil products is in that data, and a lot of clients are looking at this and analysing it, and great sort of longer histories as well. But here we see a nat gas that we've really had this catastrophic failure in gas in 2008-9, and now we're starting to really start to nudge through the cloud, and it's taking time because of this. We see this on the NASDAQ. We see this as sort of catastrophic failures produce this burden for a market for some time afterwards. But it does suggest we're sort of starting to wander out on the cloud. And if I look at the 60-minute chart, again, you know, these histories are nice and long. Bullish on nat gas. Last week we had the cross, so it was bearish week for nat gas. We need to get above this sort of 440 level for in the next day or two for nat gas to start to be back in a bullish trend. So quite a good cycle going on there. One to watch if you are looking at nat gas. Daily point and figure charts on nat gas. Here we see 540, 610, these upside targets. We see how these targets have been really good. 515 was met. We had a downside of 335. Target given back at 460 was met. This 130 is looking unlikely, to be honest. We've now got upside targets kicking in. We see the pressure from the high, which was way back up there, but really it does suggest that we are going higher this year on gas. So we expect it's the year that gas will recover as a result of this chart and the cloud. And if we look at the 1 minute charts, remember these are literally kicking in every minute. You're seeing the chart paint. So this picture is drawing and painting targets for you the whole time, and the feed is blisteringly quick. So you're getting the targets literally as these trades are happening. And here we see 443, 447, 50, really quite key upside targets short term this week. So we think gas is probably going to get above that 440 level that we talked about. And then if we look at European gas, this is your OTC gas. In fact, I like to mix the OTC and ICE contracts. You can consolidate them. This is your OTC price on gas. Again, nice long histories. This is a 60-minute chart. And we see how we had the buy in November, and then more recently we've had the sell where we've crossed down through the cloud. So it's downward pressure for European gas at the moment. And here is the correlation with oil. It has been pretty high, but we're seeing it is starting to tail off again. So oil going higher, European gas going lower by the looks of things. And here we see this is the continuous chart for months. This is a 1 minute chart, so this is your near monthly contract on MBP. Again, mixing it with the ICE contract is good because you can consolidate all the trading of the OTC and the exchange trading into one place. And here we do see downside targets, 53.25 exceeded, that's bearish. New downside target of 50.40, that is the new downside, and so another couple of pence off there. So that's, you know, down is where we see gas going this week. TTF has been trending up, behaving a little bit better than UK gas, but again, we're starting to nudge this cloud. This is the daily chart. So watch for this sort of 21 level. This is really quite key. 20 is probably the benchmark there, but because we're seeing your UK gas fall off, TTF may well do the same thing. Keep an eye on the 1 minute targets, and I know a lot of you do look at those. Here we see baseload electricity. This is German baseload. Again, a lovely long history, and this chart is really now saying, you know, this year gas power had a bad year in 2010 generally. 2011 looks like it's going to be a better year. We're above the cloud. If we go to the 60-minute chart, this has been really good for understanding the environment you're in. If you're trading power. In September, we're through, so we have this downward pressure. November, we're through, so we have the upward level here, with a little bit of congestion here in December, late December. But then we're through the cloud and are back below. And now, having been bearish most of January on power, we are now starting to see that we're potentially crossing the cloud. So really quite significant that power sort of above this 52 level, in a week or two's time, we'll be wandering out of the cloud. So that's bullish potentially for for power. And we see on the German power contract that we do have upside targets of 53.05 and 53.25. So it does suggest short term that we've got quite a good week for power. Quite interestingly here, you've got the risk-reward ratios. So 51.60 is one stop level and 51.45 is another. If you operate the 51.60 risk-reward ratio, you've got a 7-to-1 risk-reward, so distance to target to the stop. So these are potentially quite favourable trades to this sort of 53 level if you're prepared to use quite tight stops. So really significant that. And the clients that we've done training with, we know a lot of you are looking at that for your position sizing. Really quite key that you get an understanding of the risk reward when you're taking the trade. Nord Pool, a lot of clients in Norway taking the Nord Pool feed from us, telling us really that it's the best Nord Pool feed in the business. If you're trading Nord Pool, try it. It's super quick. And here we see, again, a nice long history. This is the yearly contract. You see this big rise in price that we saw in December, contract change, and then back to sort of where we had the support level. So Nord Pool has got over that spike of the winter, and then we're back to here. And if we look at the 1 minute targets, and this on Nord Pool is really significant. In fact, this has happened just whilst I've had these charts open. We had a little bit of a pullback. That thrust up this morning has given us a target of 48.05. We've got a 46.35 stop with that step back. It's a 10-to-1 risk-reward ratio to 48.05. Use these on your Nord Pool data. These 1 minute targets will amaze you. And I know a lot of you already using our system in Norway are looking, in the Nordic market, are looking at these targets. And so here we see 47, 47.60, 48.05. Even this little one of 46.65 has been met today. Upside, lots of upside, trend change. So short term, the next day or two, we expect Nord Pool to kick up. Really, I don't know how you can consider trading the Nordic market without these targets. And of course, a lot of people in Norway are obsessed with the NOK, the Norwegian krone. And here, basically, I couldn't resist just having a quick look back at Forex whilst we were looking at Nord Pool. Even though I know Nord Pool's quoted in euros, I know also that a lot of traders in Norway are always looking at the NOK-euro relationship. Here, the clouds have worked fantastically. Look, in November, you had the cross. This was telling you the trend, and we broke through, and now we're seeing the downward pressure. So really quite a key chart, this, your NOK-euro. So great fast charts in the feed. And here is the 1 minute chart. These will give you real-time live targets all the time. So if you're trading krona, you really have to have this. It's just fantastic. If we look at coal, coal's been just such an amazing story. We've just gone up and up and up. Everyone will point to the floods in Australia and all these sorts of things, but the fact is we had these targets in place ages ago. What's interesting now is coal making a double top? I was in Houston last week talking to the clients about this, and really this double top is starting to become key. If we break higher and run, then coal will go higher still, but at the moment it's starting to look a bit toppy. This is the key level, 117.50. If we spend too much time below this 117.50 mark, it suggests a double top, and then we're going back to sort of some base level on coal. So really a really important chart to watch. Here we see the 1 minute targets on coal. They've been fantastic. 114.25 was met, 123.25 and 122.50. These were given right back at the 110 level, met. Here is the gyrations. No new upside targets, no new downside targets. Really quite significant. We're stuck in that big range at the top. So if we get a thrust up and make a new high, we'll get an upside target. And if we break that key 117 and get a thrust down, we'll get a new downside target. So at the moment, it's hard to call, but it is looking a bit toppy. And here we look at the daily data on coal, and we really do see how this was the thrust we saw last time that gave us these targets. We need to see a setback and a thrust off a low to see the next target on coal. So really really quite critical that we're looking for that setback and then a fast recovery to give us the next thrust. If I look at emissions, this chart has just become sideways, sideways, sideways. It's been literally an impossible market to trade. This is the ICE emissions contract. If I look at it, we really are stuck in this sort of congestion zone. So medium to longer term, it's hard to call. But the 1 minute chart, of course, you do get the targets, and we do have upside targets. 1493, 1504, 1535. The 1535 is not activated, the other two are. 15 euros is kind of where you'd expect on this 1 minute chart. Keep an eye on this chart though, because of the congestion, you do get conflicting targets. It's really quite hard one to trade. Because you're in that range, the indicators will work quite well. RSI, the 14-hour RSI, does work quite well on emissions. And I know a lot of clients have been to a desk there relying on that 14-hour RSI, quite critical. So if you are trading emissions, that's the chart to look at whilst we're in the range. Last of all, we look at gold. We've got a great metals feed in Updata as well, so the metals data is fantastic. Upside target of gold is 1800. You're hearing a lot of people saying gold has topped. We still have an upside target of 1800 in place. Admittedly, we've had a setback in gold, but the reality is that long term there's quite an upside. Here's the daily chart. We've really stayed above the cloud for some time. We're testing it right now. So this next week is going to be quite critical for what gold does. Through on the price, which is worrying, but it's this lagging line. We need to keep an eye on that, and really that's the one to watch. Here we see the 60-minute chart, so we see the bearish shorter-term trend in coal, really quite key, but in gold. But really, we'll be looking to start reversing this and building above the cloud. So the next week or two is quite critical for gold. And if we look at the 1 minute chart, we've got upside target of 1362, downside target of 1300. So we really have got a variance of about $30 either way on gold in the short term, and it's a bit hard to call which way it's going to go. Just keep a very close eye on this 1 minute chart, really quite key. That's it for this week. And by the way, don't forget, we're also doing charts now on your phone, so you can actually you can actually see the charts on your BlackBerry. The same thing, the point and figure, the clouds. You have this data on your BlackBerry with the Updata feed. So I'm actually using this more and more because I'm not always at my computer. So remember, we're always happy to talk to you about any of these data solutions. Just give us a call. Try the feed. It's really good. That's it for this week. Until next week, happy charting. See you then.